What's up, everybody? It's Stock Picks by Tim back again, and I want to talk about Indi and their recent earnings report. I'm going to leave you at the end with their earnings call cut up to about 15 minutes, and of course, I'll leave you the link below if you want to look for it yourself and watch the full thing. And you will just have to fill out your email, first name, that kind of stuff, just to listen to their earnings call. Typical business. So getting into their earnings first, they're on track to make well over 100 million in revenue in 2022. Reaching profitability by the end of 2022 is the expectation, so we'll see how that goes. So the revenue is up 185% year over year, while it's up 56% sequentially. Now there's a part at the end where the CEO is answering a question. He talks about the performance, power, and energy consumption versus their competitors, involving a top tier company with a binding contract, so they can't really go into much detail about it. But they are a significant market holder in the semiconductor industry, in the automotive industry. Now, looking at the chart here, you'll see, now after hours we started kind of running, but then we went back to going pretty flat. You'll notice that we're right here at this zone, this W, this double bottom, it hits this 3 spots. We are trying to cover that as a support. We'll see how that holds. Otherwise, we may test our low 6s, so we'll see how that goes. But I do expect it to hold pretty well. I think their earnings went pretty good. And now that it's behind us, we have a decent earnings. It wasn't bad. It seems like despite the semiconductor shortage, Indi still did pretty well. So that's a good thing to see. And I've had a really long day. I've been driving in snow all day, so I'm just going to leave you guys with the earnings call. There's definitely a lot of information in there. And if you want to hear the whole thing, it's about 25 minutes, so I'll leave you guys a link if you want to listen to that. But thanks as always, guys, and see you next time.
I'm pleased to report that Indi delivered another record quarter in Q4, and in turn, an outstanding year. Despite global capacity constraints, we are successfully navigating a still challenging supply chain environment and executing operationally to meet increasing customer demand for our highly innovative auto tech solutions. Our outperformance is a true testament to the strength of the Indi team, our differentiated product portfolio and underlying IP, as well as the powerful automotive megatrends fueling the need for the next generation ADAS, user experience, and electrification solutions. Specifically, during the fourth quarter, we substantially outpaced our addressable markets and grew revenue to a record $19 million. We expanded gross margin by more than 1,000 basis points year over year and over 300 basis points sequentially. We gained design win traction across a number of new products and customers and significantly augmented our LiDAR and radar portfolios via organic development and key acquisitions. From a full year 2021 perspective, we delivered a record $48 million in revenue, more than doubling of 2020's top line. We improved gross margin by over 100 basis points to above 43%, significantly increased our R&D investments in strategic product areas, implemented critical public company infrastructure pre and post our June IPO, and perhaps most importantly, given our strong balance sheet and expanding sensor modality capabilities, we captured several major design wins with leading customers. The impact of these efforts cannot be understated and are positioning Indi to become the premier supplier of embedded mixed signal solutions for user experience and full system offerings spanning LiDAR, radar, ultrasound, and vision, precisely as the automotive industry increases its demands for these complex solutions. Indi's advanced auto tech solutions directly answer the performance and integration challenges faced by automotive tier ones and car OEMs today, and will continue to exceed next generation vehicle requirements as complexity increases. Simply put, as the degree of self-driving increases, the number of sensors will grow exponentially. More high-end embedded processors will be required to enhance safety, as well as the driver and passenger experience. And given our advanced digital architectures, high-speed mixed signal, DSP, power management, and connectivity technologies, these strategic dynamics bode well for Indi and will translate into greater content per vehicle for us. In fact, at the core of today's vehicles are hundreds of semiconductors sensing surroundings, making real-time decisions, and controlling the vehicle system operation. Accordingly, the average semiconductor content per car is expected to grow from roughly $500 today to over $4,000 over the coming decade. To that end, during the quarter, we expanded production of advanced interior lighting solutions to support multiple new OEM customers, captured onboard telematics design wins at IO6, a fleet information services provider, commenced shipments of exterior lighting products with a leading German OEM, were awarded a vehicle security system program with a European Tier 1 supplier, unveiled Surya, a highly integrated LiDAR SoC augmented by Teraxion's world-class laser and sensing solutions. Until now, LiDAR systems have not met the cost targets given the high price points for discrete implementations. We believe Surya represents a breakthrough in achieving the cost requirements while providing outstanding performance. At the same time, our acquisition of Analog Devices' Sumeo radar division last month is accelerating Indi's entry into the large and growing automotive radar market, which is expected to reach a TAM of $7.6 billion by 2026. Sumeo's industry-leading software and system technologies, underpinned by 120 radar-related global patents and applications, enables real-time position detection and velocity measurement for high-precision radar solutions. Further, our acquisition of onsemi's highly skilled radar design engineers in Israel brings a strong domain experience in millimeter wave technologies, along with 65 radar patents and applications. Merging the ADI and onsemi teams with incredibly strong and complementary expertise under the Indi umbrella has significantly expanded our capabilities in the radar field. As a direct result of these twin acquisitions, I'm pleased to report that we've recently entered into a strategic development agreement with one of the top 4 global automotive radar suppliers in the world. This program has the potential to be one of the single largest design wins in Indi's history and validates our organic radar investments and recent acquisitions. We fully expect similar milestone wins in the near future as we leverage technologies common across LiDAR, radar, vision, and ultrasound applications. In summary, Indi is now even better positioned to capitalize on the autotech opportunity as automakers make large-scale investments in next-generation vehicles that will usher in increased safety features and enhance the user experience towards ubiquitous electrification and autonomy.
Thanks, Donald. Indi delivered strong fourth quarter results, once again exceeding our guidance and analyst expectations. Revenue was up 185% year over year and 56% sequentially to a record $19 million, ahead of our guidance for 50% sequential growth, driven by ADAS, user experience, and electrification demand, as well as the addition of a stub period of Teraxion. Gross profit was $8.8 million, translating into a 46.3% gross margin, up 1,090 basis points year over year, 330 basis points sequentially, while 130 basis points better than our guidance. Operating expenses were on forecast at $21.4 million, up from $16.8 million in the prior quarter, as we increased our R&D investments to $15.6 million to accelerate product development. As a result, our operating loss was $12.7 million and ahead of analyst consensus estimates. Interest, other expenses, and taxes were $50,000, yielding a net loss of $12.7 million and loss per share of 9 cents on a base of 146.8 million shares. Turning to the balance sheet, post our operating loss, working capital investments, and acquisition expenditures, we exited Q4 with $219 million in cash with limited debt. For the full year, revenue more than doubled to a record $48.4 million, with 2021 gross margin expanding to 43.7%, a 140 basis point improvement over the prior year. Achieving this level of performance was all the more remarkable in light of a challenging global supply chain environment. Specifically, for the first quarter of 2022, we anticipate revenue to be up 160 to 170% year over year and in the range of 21 to 22 million, putting Indi on pace for another record quarter and a stellar 2022. With this guidance, Indi is already on a roughly $86 million annualized revenue run rate and is tracking to deliver well over $100 million in total revenue in 2022. For Q1, at the midpoint of our revenue guidance range, we plan to further expand gross margin to 47%, with $27 million in operating expenses, comprised of $21 million in R&D and $6 million in SG&A, as we increase our product development investment in response to pent-up customer demand, particularly in radar, and extend our sales and marketing reach globally. Indi is poised to capitalize on the strategic auto tech market and translate our design win momentum into long-term shareholder value. We are well on our way to reaching profitability in the back half of next year and realizing our long-term targets of 60% gross and 30% operating margins by 2025.
To summarize, the rapid emergence of user experience, semi-autonomous, and ultimately fully self-driving vehicles, in addition to electrification, are creating enormous opportunities for the auto tech landscape, and Indi in particular, as these applications require highly integrated semiconductor and embedded software technologies. Keep in mind, Indi is riding a powerful multi-year tailwind, as the global automotive semiconductor TAM is expected to grow from $36 billion last year to $62 billion by 2026, and as OEMs announce worldwide e-vehicle investments over the next 5 years that will exceed $250 billion, in some cases committing to shift their entire car portfolio to electric within the next 15 years. Indi's disruptive technologies are helping to empower this auto tech revolution and are enabling us to outpace the growth of the market. Couldn't be more thrilled about how Indi's differentiated semiconductor, sensor, and software technologies are driving the next wave of the automotive industry innovation.
Hi guys, thanks for letting me ask a question and congrats. I wanted to see if, Donald, you could go into a little more detail about the strategic radar engagement that you have. Obviously, you're not going to name specific companies and customers, et cetera, or numbers, but what led to that? What was the appeal that you had? I know you did some things organically and inorganically, but just a little bit of color about how that came about and what's the special sauce you're bringing to that customer?
Well, first, let me talk about the significance of it. I mean, I can't underline it enough. It's a huge milestone for us as a company. It's a very binding contract on both sides. The thing that brought us together really was the technology that we were able to bring, which was very differentiated in terms of cost, performance, power consumption versus the incumbents. The customer themselves, they are one of the significant market shareholders out there at the moment. Our expectation is that we will take a very significant, large portion of their addressable market, and it's a large dollar content per car for us, so it's going to be pretty significant.
Donald, I'll follow up on some of the other questions around the new strategic development agreement. So first, congratulations, given the significance of that accomplishment. The questions are this: one, and admittedly you can't give customer names, but can you provide any color on the potential for further end customer diversification? And I was hoping you could also provide some further color on the comments that there's pent-up demand out there in radar and your ability to address that pent-up demand as you engage with this new partner or other partners. Thank you.
Well, in terms of does it give us access to new market, of course, because it's really our first entry into the radar market itself. So it's incremental versus our running business. In terms of the sell through into OEMs, then yes, there will be some who, as a result of this relationship, who we haven't accessed in the past. So it does give us, let's say, an incremental increase in our TAM. In terms of the significance of the business itself, again, if you consider the amount of sensors that are being deployed per car, if you just sort of take a round number of 80 million cars in a normal year manufactured, they have up to 4 radar sensors. There were a limited number of vendors who were able to provide the technologies which were required in that market. It is an aggressive investment in order to deploy that. But we felt, and our customer felt, and the market felt in general, that it was a requirement to have one new vendor introduced to a very limited subset of vendors, and we won that prize. Really, it represents, in terms of the kind of size and order of magnitude of business that we can address, it really represents the first time, I would say, that Indi as a company is actually being able to win one of the premium design wins in the automotive market at all.
Yeah, just wanted to see if you could talk maybe a little bit about the vehicle security system program that you won with the European Tier 1, and maybe just what that ramp looks like. Any color around that opportunity, maybe anything around the specifics of the solution there?
Well, basically, it's a classic intruder detection, so stop the car getting stolen or broken into. It's a reasonably complex system. It's an area where we've been active for a long period of time in the company's history. But this actually really gives us access to a new market, a new set of customers in the end result. So it should be a fairly reasonable incremental revenue stream for us going forward. Probably we would decline to quantify it exactly at this point. But also it's kind of congruent with the regular time frame of the car market. What we've won today will likely go to production in 25 or so.
Okay, fantastic. Thank you. And then maybe just as you think about your pipeline, you have a robust, it seems like, a number of design wins across the different areas. How do you think about each segment over time in terms of the revenue contribution? And where do you see the greatest design win activity? And then maybe talk about your ability to scale up in terms of capacity to meet that demand that's forthcoming.
So, I mean, the growth is coming from all of our product areas at the moment. Historically, the user experience has been where the greater majority of our business has come from. Where we see the largest medium-term demand is in the sensing space, so which we sometimes misname as ADAS, so in LiDAR, radar, vision, and in ultrasound. That's where we would expect to see within our business the growth outpace the rest of the business, I would say. Electrification is kind of early doors for us, but we have a significant design win in that space, which we talked about, I guess, 2 quarters ago, or maybe 1 quarter ago in the earnings. Last quarter. Which is, I would say, kind of a vanguard of our drive into that market. But all of the segments will contribute pretty nicely to the overall company's top line.